Hello guys, today I would like to start our conversation with regard to chapter 8 that is all about fraud and cash. So today in particular in this video I will concentrate on learning objective 1 as far as fraud and then principles of internal control. I decided to omit a couple of slides on the fraud triangle, Sarbanes-Oxley. I figured that you can read it easily in the chapter. However, I will specifically go through the internal controls with you. So what's internal control and what's in particular purpose of it? The number one is to safeguard assets so they don't just walk out the door. And then another one, enhance the reliability of accounting records. So those are the two primary ones, but then we do have increased efficiency of operations potentially, and then ensure compliance with laws and regulations, especially if you have maybe governmental units as well as non-for-profits. So basically I'm giving you 5 cents worth of auditing. Internal controls have 5 primary components. I will not test you on these 5. If you take auditing, you'll have to go through these. What I will test you greatly on the 6 principles of internal control activities. So here's one of them, and we have 6 in total. So if you go through your chapter, you'll find where they're all listed. So we're starting with the very first one that is called establishment of responsibility. So what does it mean? It stands for that if controls are most effective when you have only one person responsible for a given task. So again, one and given task. Okay, so that means you might have to limit access only to authorized personnel, and then you should be the one who knows who that personnel is. I strongly encourage you, because a lot of you already work, think through activities that you do at work. Can you find some of these 6 controls and identify them? So for example, you might remember, if you've ever ran a cash drawer, that you have to be identified as cash clerk before you could have access to a drawer. And it has to be your drawer, right? So you're not supposed to be jumping from one drawer to the other one. So if something happens, we know whose drawer it was and who is responsible. Okay, so in this case, if I were to draw it out as a drawing, so one person and one task is great. Okay, that's the way to go. Okay, that's awesome. If I have 2 people responsible for one task, then one of them is slacking, right, or embezzling. I have a big question mark. I don't know who out of the 2 or 3. Okay, so let's take a look at the next one. The next control get confused with establishment of responsibilities a lot. So let's take a look at this one. It's called segregation of duties. It states that different individuals should be responsible for related activities. Which activities are related? Typically, related activities are considered to be record keeping versus physical custody of the asset. So I will need to have at least 2, okay? One will have, I'm going to give this guy cash or physical custody of the asset, and this one will have records. So it will have big barn book, okay? So this is great. This is perfect. If I happen to have, or like you can see up here, custody of cash on hand versus cash per books. So that's wonderful. If I have one wonderful guy, I'm going to put him in a different color, okay? Top hat. That has both cash and records, okay? So see, it has 2 tasks. It's not like on the prior slide, one person per one task. This guy is top hat, got too many duties going on. It's got cash or physical access to assets and the records. Way too many. Why? Because I can take some cash out and falsify the records, and you will never know. Okay, so I will cover up my tracks. Okay, so sometimes visual represents, especially on the exam when you're trying to come up with what kind of activity is it after all. So I decided to copy some of the related activities that your book lists, and I apologize, PowerPoint slide when I imported it somehow ran into each other. So it's hard for you to identify which activities are truly related. So in your book you have related purchasing activities, okay? Quite a few of them. They include ordering merchandise, approving orders, receiving goods, authorizing payments, and then actually paying for the services. So you can see how many different people you have to have in staff to be able to properly segregate related duties. Okay, so and they give you a couple of examples. For example, if a purchasing agent is allowed to order goods without obtaining supervisory approval, right? So we have approvals and then orders, that's together. The likelihood of purchasing agent receiving kickbacks from suppliers will go up, right? Or if an employee who orders goods, ordering the goods, also handles the invoice, where is it? So we've got authorizing payments and then paying for the goods, as well as payment authorization. He or she might authorize payment for a fictitious invoice. Okay, so again, all these, you might want to review them before the exam. If you see any of these connected, it's most likely segregation of duties. You have another paragraph in your book as far as related sales activities. Okay, so which ones are these? Making a sale, shipping or delivering the goods, billing, and then receiving payment. Again, you need to have separate individuals responsible for these activities. And again, another example of a salesperson can make a sale without obtaining supervisory approval. He can make a sale at unauthorized prices to increase sales commission. Okay, or a shipping clerk can also has access to accounting records, can ship the goods to himself. How wonderful is that? A billing clerk who handles billing and receipts could understate the amount billed for sales made to friends and relatives. All right, our next principle of internal control is documentation procedures. Auditors love paper trail, okay? So think of it as everything about documents and paper. We like to use pre-numbered documents. So you can see up here, we pre-number invoices. Sometimes we pre-number our purchase orders, we pre-number checks, because it's easier to keep track of them. If somebody tries to reuse it, we can see that it was reused. Or it's easier in the checkbook to keep track of your checks that way as well. Okay, so this one is straightforward. What's the next one? Physical controls. So think about safes, vaults, safety deposit boxes, locks, computer facilities where you can either have touch, fingerprint, or eyeball or facial recognition. Alarms, we've got sensors, we've got monitors. You have password protections, that's also your physical controls. Or time clocks to record the time work. Okay, independent internal verification is a little bit of a harder one, and a lot of times we show it on a picture to make it easier. Most of the time, independent internal verification is done by an overseeing manager. So for example, in this picture, we have two employees, one with books, the other one with physical access, so their duties are segregated. We have a segregation of duties here. But we have a third person, an assistant treasurer above both of them, who makes monthly comparison. So he will be the one to reconcile any discrepancies. So for example, we'll go and count cash and then compare to the records to see, do we have the same amount in both or not? I would like to point out that a classical example of independent internal verification is bank statement reconciliation. So if you see bank statement reconciliation on the exam, I would say remember that it is an example of independent internal verification. Okay, one more, human resource control. This one is pretty easy. So we will, especially in churches or in other non-for-profits or just in regular positions in banks, we will bond employees who handle cash. What does it mean? Are we going to tie them up? Well, no. Bonding means you will take out an insurance policy on your employees who handle cash. So if fraud or embezzlement occurs, an insurance company will cover the expenses involved. Okay. Another one, you will rotate your employees' duties and require employees to take vacations. Why is that? Because if you're sending somebody on vacation, that means somebody else, another person, has to step in and perform the same duties, almost filling in as independent internal verification. So I will review your work just by virtue of stepping in. Now I have to follow what you did. So I will double check your work, whether I like it or not. And then we will conduct thorough background checks as well. So we will pull the credit report before we even hire an employee and see if there were any other persecution or embezzlement cases, or maybe if you have potential red flags such as very low credit score. So I could see you have a lot of debt, so your physical pressure, financial pressure to commit fraud might be stronger than for an employee with a higher credit score. Okay, so we've gone through all 6 of them. Unfortunately, there are limitations to internal controls, such as cost versus benefits, human element, meaning a person could be sick, and that's why he or she will commit the error, and the size of the business. So we saw, for example, in sales and purchasing activities, how many people you need for various activities to cover it. Well, what if you don't have that many? So you might be in the bind.